Powell with this week's Precious Metals Market Update. The questions continue to pour in as the number one question is, why are these central banks buying so much gold at this time? What do they know that we don't know? Why is demand for gold to a regular investor at such low levels in this country and continuing to grow in China, both in the central bank and individuals? Once again, what do they know that you don't know? Why are they pulling their money out of equities and moving a bigger percentage to hard assets? And yet we in America are at some of the lowest volume that we've been in gold purchases in the last 36 months. So these are things that we have to address. While I can't give you all the answers to every question, what I can tell you is March figures are just in, and Russia bought 600,000 ounces, the central bank did, and got rid of US dollars. China bought 360,000 ounces of gold in March. Turkey, 546,000 ounces. Kazakhstan, 161,000 ounces. And these were central bank purchases by the biggest four. That's not even all of it. So they're buying this and getting rid of US treasuries, US securities, and buying gold because they realize there is a financial crisis brewing through debt, paper money, fiat currency, money by decree, whatever you want to name it. So you're being told, you're seeing the symptoms of this kind of nobody having a currency worth anything except a bookkeeping entry in the world. Everybody tries to keep up politically, so they just keep printing money. I've sent you to usdebt.org many times, but you need to go visit it again and just look at the stunning numbers that were going up in debt. Once again, usdebt.org, and I would strongly urge you to take a look at it when you have a chance. So we look at this and say now we find out that we had exports out of Switzerland to China, 1 million ounces of physical gold was transferred in March from Switzerland to Chinese investors that own it and warned delivery of their gold. On Monday, when gold took a turn down 20 bucks, $1.5 billion of gold was sold, but it's not real gold, it's paper gold. It's a piece of paper. And so people panic, they sell their gold, and the people that jump on the bandwagon to go short or long make a little extra profit by being in the market for a few days. But what is happening is, as these countries I read keep taking the physical gold is going to go down, 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 and then eventually, whether it's next month, 6 months, next year, or 2 or 3 years, you're going to have a gold-backed currency. At that point, the dollar collapses. We have a currency that literally is devalued every day through compound interest. We keep rolling over small security debts, 6-month treasuries, 12-month treasuries, 2-year bonds, 10-year bonds. Nobody buys them, they roll over, so you have to pay more interest again on the same money, the compound of money. So we realize there is no way out of this. It's going to be an explosion. And the point is, are you going to be well diversified? We're 1% from the highest stock price in the US of all times. Stocks might go higher. I'm not arguing that. This is not whether you buy gold or stocks. It's you buy gold, silver, and stocks. That's diversification. That's taught in the Holy Bible in Ecclesiastes 11:2 to divide your wealth into different investments. So you've got to use common sense. These banks are not buying hundreds of thousands, and this after a 632 million ounce purchased last year by central banks, the highest of all time, through March, we're now running at over an 800 million ounces by central banks. And once again, they're buying it because it is part of the solution to the world financial problems that are growing quickly. Watch banks in Portugal, Spain, and Italy that could lead the domino that starts all this falling in the next few months. And when that domino falls, remember, there is no bailout by governments. It's bail in. They keep your money, give you a small percentage, rest of it's theirs. You cannot sue them. Cannot sue them. If you don't believe me, go on the internet and put bail in legislation and read about it. So if you have money in the bank, like I said, you cannot, if they keep 50% of your money, you have no recourse whatsoever. So just be aware of it. Have no more in the banking system than you need. Have your precious metals at the percentage you want, both gold and silver and platinum. How about that buy signal I gave on platinum a couple months ago? Look what's going on there. We're up at 900 now. And for the ones of you who don't remember, I'll be out speaking at the FTM Summit here on May 31st and June 1st. I hope to see you there. But if you haven't signed up, get on FTM Daily and get with Jerry and Jennifer Robinson and get in that conference, because I'll be talking about things I don't talk about on these updates that are much more in depth, and some things going on that I'm not comfortable talking about, but you will find of a lot of interest. We'll talk about silver and platinum, palladium next week, but almost every question I had from listeners this week said, why are central banks keep buying? And the answer is very simple. They think gold is a solution, and they think because of the paper money, gold is grossly undervalued. I'll ask you a question and end it with this. With the Dow at say 26,000, do you think the Dow is going to go to 52,000 before gold goes from 1,300 to 2,600? I don't think it's going to be a close race at all. But gold is getting ready to make its next big move. It may take a few weeks or months before it really takes off. But that's when you'll be paying higher premiums, harder to get what you want, and your price will be going up. When all these go up and people like JP Morgan quit going short the market and go long like they did between 2000 2012 when gold went from 256 to over 1,800. If you don't have a self-directed precious metals IRA, we can help you get that. Give us a call at 800-247-2812. That's 800-247-2812. And once again, I hope to see you in a few weeks out in Arkansas at the FTM Financial Summit. With all this information, this is Tom Cloud with this week's Market Update. Checking out.